Okay, guys, welcome to the Sunday night charting. So just like every other week, I'm just going to start with alphabetical order like usual. I'm going to save SPY for last, the indexes and whatnot, since I feel those are the most important. But outside of those, we'll just start with Apple and work our way down. Any questions while I'm going through this, just type them in the Zoom chat and let me know if you have any questions or if you want something else on a different time frame charted, just let me know. I kept the levels from last week for the stocks that were reoccurring that we just charted this past Sunday. So I'm going to kind of use those and see not how close I was when I charted, but more so just like a guidance as to how they reacted with the levels I posted and I charted for you guys this past week. So we're just going to start with Apple. And just like the last, I don't know, 3-4 weeks I've been doing this now, it's still in this trend that I've been, why is it on top not going away? It's still in the same trend line I've been talking about for a while. And like I've said in the past, this is also something that I feel is not too important. A lot of people are like, well, you have to hit like the tops on everything. So a lot of people will match the top of the wicks with a trend line, which I don't see as important because if you do it that way in this scenario, you'll see that Apple still has a major gap to fill up to almost 168 a share. So I like to take the overall like momentum candles in the zone. So I'm not too big on like the top of the wick. I just want to catch the overall where it touches the most. So if I zoom in on this heavy consolidation here, you can see how majority of the candles are a little bit lower than the actual top of the wick at 178.53. So I'm focused on the overall area of this, just like how this trend line, instead of putting to the very top of the 181.61, you can use like the previous high before it broke and use that zone with the trend. It doesn't have to be a pinpoint of the wicks because a lot of people will do that. It makes you wait more if like you're waiting for a resistance tap out to hit, like how Apple is if you do that. So if I raise this trend line a bit, it gives Apple a lot more room to run on the upside. But I'm more so focused on like fake wick outs above that could break above the trend and pull back in. So for me, anywhere I'd say around this area. I mean, you can raise it a little bit, you can drop it down if you want to, but the main focal point when I do this for Apple, there's still a gap fill on the upside. We have not filled what I see from my trend line with the gap fill. So when I'm looking at this, obviously from last week, we had the 162.14 level. And let's see, Friday, Thursday. So basically on Monday, we're around Monday was around this area right here. So just like I was talking about in the charting last week, we had a level at 156.91. And just like I've said previously, and I'll keep repeating this so it gets stuck in your head, there's no exact like 156.91. You just want the zone. So you could lower this down to 156.31, raise it up to 157.20. You just want to have a line for a zone in a specific area. It's not a pinpoint. If you want to do a pinpoint, that's fine. But for me, I just had it roughly in that area. And sure enough, after the Monday sell-off we dropped down Tuesday and held that support. And then we actually contested and broke the resistance I pointed out at 162.14. Just like the support level I was just talking about, the zone is just a rough estimate area. It does not have to be a pinpoint to the decimal. If you find a level like that historically, that's perfectly fine, but it's not required and it's not like needed if that's what you think when you chart. Like, oh, I have to have an exact level of price action. I have to have an exact point to the decimal. I like to put my levels where I just understand why it's there. Obviously, this orange, I make my resistance orange and yellow just for clarification in case something crazy happens with price action on a stock. And usually the white and the purple I leave as indecisive, and then red is like the main support. So I put this white here, obviously, because it wasn't like the heaviest. But since it held at this point, which obviously we broke above, I can make this red now because it held the pullback just like before it broke out above back here, it was holding as resistance. So after it broke above, it pulled back to now support and held that level. So when I talk about this on, well, this past Sunday when I talked about it, I was saying how if Apple has a pullback to that white line, which I just made red, obviously, 156 50-cent area for the share price on Apple was a good place to load calls for a pull up. And obviously, I was not watching Apple, so I didn't make a position. I did not say anything about it. but the level I had for a rough estimate of support that would have held did follow through like I figured. Now, here's the main thing that I'm going to kind of break down a little bit, since the first example of Apple is pretty good for me to do this with. If you size in week of on this Apple play for calls, you may be faked out only because when you're looking at this from a smaller frame, and I'm going to go to the 5-minute right here, you could get faked out by this, even though you had this support zone at the 156 whatever area, 156.10 to 157. That's like a support zone. If you add time to a contract, whether it's a week out, so not this past Friday expiration, but this upcoming Friday for Apple calls, it gives you more conviction to hold the play only because you have time. It's going to cost a little bit more, but say you enter the position and it comes down more, or it just goes opposite of what you have. So with puts, it rises up. With calls, it drops lower. The more time you add to these contracts, you're not going to get shaked out or scared if it doesn't go your way right away. So the main focal point that I usually have is if I plays the week of expiration, which obviously for Tuesday drop down for the support hold, if you got the same week expiration, which would be this past Friday, you don't want to size as heavy as you would 1 to 2 weeks out or a month out, because you have less time, which is higher risk. So when playing this, I can't look at the contracts from this past week because they're all gone already. All it shows is the upcoming. But if you would have sized in, let's just say the 160 call or the 155 call, you would have been one slot in the money for the 155. But if you had a 160 for the week of, my best guess is it was probably like around $30, $40 a piece, $25 a piece probably. So it's the idea of what is a size on Apple's contract that matches my portfolio size to the point where if it drops, say I'm down 50%, 80%, I'm not tempted to sell. I'm fine with it going to zero. That's how you want to size into stuff like this when I chart. I'm all about the larger frames, which you guys know about, only because it teaches me patience and it makes me wait for the highest possible risk to reward scenario in my favor. The probability of a chart like this, when you wait for the larger and more like the more important zones, not just putting zones wherever you want. So if we looked at this, say we're looking at this from this past Sunday, I remember mentioning this and I said I want to put a zone here because you never know, it could pull back lower. You could have had a support zone here, and on Monday it bounced and tried to retract on the upside, but overnight in the Tuesday it had that gap down to my main support that I talked about. So when it comes to zones, for me, and you guys can do it different, it's all up to how you feel personally. I like to use the major zones on the larger frames because, one, it teaches me patience and makes me wait for the play to come, but also I'm not rushing anything. The more lines I have, like if I just start putting lines in on almost every rejection possible, there's a resistance here. We can put one in down here as well, where we had this rejection kind of. For me, this is just a distraction. So many different lines. When I go to the 5-minute now, like what level means what? That's how I'm thinking when I used to chart, when I had all these levels, like 8 levels within a $5 price action on the share price. So once I figured out patience is the virtue of everything, because if you're right when you wait for the main move, the odds of you being incorrect are probably, I'd say 15 to 20%, which right away you're at a 1 to 5 risk reward. If you size properly where you can hold the zero and not have to stress about the play going the wrong direction, I would honestly say there's no emotion in the play and you're focused on the major move, the overall perspective on the larger frame, which when we look at the 4-hour again on Apple, we broke out above that red, which had multiple rejections for the resistance historically. So I'm just doing this so you can see from a visual perspective. Once we finally broke above this level, I charted the 162 because when we did this past Sunday, this was the main rejection of the prior week. So that's why I put the 162 area there for a rejection. I put the 156 before this dip happened, only because historically what I just did with the highlights, it was a major resistance. Now that the stock broke above, a pullback is going to test that zone as support now. If it holds that support, which it did obviously, that's a huge indication swing calls, or at least size into your preference. I would say your account size, your risk management, your emotional personality as a person. Can you hold longer? Are you just trying to scalp? That zone held, and when it pulled back, that historical resistance is now support, and it bounced perfect. Obviously, it didn't bounce instantly. It wasn't like a wick and pullback. It held for a while. That's why you want to size light and you just want to wait for these zones to come to you. So I wanted to break that down because I feel like Apple may be the only one that had this exact price action based off what I charted last week. So now I'm going to talk about just moving forward with how I see Apple going into the end of this week now. And everything I say obviously is personal bias. It's my personal opinion. Nothing's going to be 100% right. But this was one play where if I would have been focusing on it, I would have sized in light and just held it. And obviously, off this bottom to the high on Friday close is basically a $10 move, basically a $9, $8 move. So now looking at this, I'm going to pull back the daily on Apple. I still see continuation on the upside. Will we have a pullback to the 162, which is now going to be support? I'm not too sure about that. But just going off new levels and new zones now, I'm focused on the daily, this rejection here. We had a wick out rejection right here. We had a little bit of consolidation in this area, but it tried to push and fail, came back down. So I have a rough idea, like I said earlier, a rough idea of an area that I should put for a rejection. So I'm going to do that now. And I'm going to use mainly these two candles and the ones back here because this one is a little low. It was around 163, 163.50. I want to give it leeway on the upside because we basically already passed that. So I'm looking at multiple rejections now around the 165.50 area. So I'm just going to put a line there and make this yellow for now while I look on the 4 hour and see what other zones are correlating with that yellow line I just put down. So obviously this was the main level I was talking about on the daily, this area right here. And I just scroll back, I look around. Here's a bounce, which acted as support right here. So I'm basically like, it seems very simple, which it is. You're just going back on the larger time frame and seeing, has this zone acted accordingly for a resistance or a support side? Has it acted for a main rejection or a main bounce point? That's what you're focused on with this. So going back on here, it held support. It gapped down overnight. Obviously, it opened. It basically pushed right up. So pre-market, it basically held that level. So I could raise this up a little bit. I can keep it where it was. Anywhere in this area, I see a rejection coming on Apple. And I don't want to say, oh, if this touches, get puts, it's going to reject. This is a zone to watch. How is it going to form on the 5 minute, the 15 minute, the 30 minute as it contests 165, 50, 166 a share area? So I'll keep that around 166 on the dot. 165.99. I'm not going to waste my time trying to get that dead on. So I'm going to go back to the 15 minute now. So we're basically approaching that level. If we have a pullback, I'm going to have to change this color now since it's now support. So we're focused on the previous resistance, which is now support, the 162.14 area, 162 a share, 162.50. Anywhere in that zone I have as a support. If we break past that, we have the lower support at 156. So I literally have three levels here. The resistance at 166, basically 166 a share, which is about $1 higher from where Apple is right now. The retract, if we have a pullback Monday or Tuesday, the 162.50 area, 162 a share. And then the major gap fill on the downside, if that one breaks, is going to be the 156.70, 157 a share area. Those are the three main levels I personally would focus on if I was watching Apple. So now AMD, just like Apple, I left the levels on from last week just to see how the correlation would be. And we did not tap out at the 104 area I talked about. And that may have been actually before Sunday when that happened. Where was the actual Monday open? Right here. So Monday's this area right here. So I had the one, what was it, 97.50 area. I had that as just a rejection basically, and we're still holding in that zone. We haven't had enough strength to break upside. If we go to the daily again, we're basically making a bull flag. The question is going to be, is tech going to stay hot this week? Are chip stocks going to be hot this week still? I honestly see if we don't get a pullback, this will just rip on the upside only because of the historical reasoning with consolidation rejected. If we get buying pressure now, we're not going to reject, but we'll at least touch 104 a share. If we get a pullback, and I will do this real quick. We have a lot of buying pressure at this area right here, which is roughly $93.50 a share to $94 a share. AMD is unable to break that just off the current time frames on the daily where we pulled back and wicked with buying pressure, pushing it back up, and also historically where we've held it, but we ended up breaking down eventually. So the question with AMD is going to be, is the volume going to be mostly buying pressure? Can the volume keep up to keep the momentum moving upside? Are chip stocks going to be hot? Is technology overall going to stay hot like it has been? I mean, I know the QQQ has been pushing even when SPY's kind of been lagging behind it. The Q has been a lot stronger than SPY has. And I will see if I can, I mean, we're basically in the same zone from last week. So there's not really any new levels you can put. But if you want a level on the smaller frames, like the 30-minute, you can focus on this zone right here, which is going to be slightly above the current price action. So that's going to be around basically $100 a share, $99.50 a share. You can put a rejection there, but I don't recommend using that as like, oh, if this touches, I have to get puts. This is a heavy rejection zone. I'm more so putting this here because just in the past 6 days from the previous charting session we did, this is rejected. On Thursday, rejected and pulled back. And then basically Monday open, we didn't have that push at Monday, but we still held about a dollar below where I put that yellow line at $99.50 a share for AMD. So overall, we're just zoning right now. AMD zoning, larger frames, bull flag, smaller frames, consolidation. Basically, it's just watching volume. The QQQ, chip stocks, is NVIDIA going to run with chips as well? You want to focus on the overall sector with AMD. So I would watch tech, other chip sector stocks, and then just see if the buying pressure stays higher than the average daily or if it has less, and just go accordingly to that. So now I'm on Amazon right now, and I'm on the daily. And just like before, I kept the main trend of the falling wedge. I've been talking about this every time we've been charting this. I feel we're going to fill the gap at least up to $108 a share, $110 a share. We broke out of the zones I did this past week for you guys, and I only had 2 zones. It was literally support and resistance just on the 4 hour with all this right here. Oh, geez. There we go. We had rejections on the upside, rejecting. And then just in the past 2.5 weeks before the breakout that happened this past week, we kept rejecting that around $100 a share, $100.50 a share. We were also holding support historically around $96 a share, $96.50 a share. So just going off the 30-minute now, Monday was right here. We pulled back to that support on Tuesday. I mean, almost every stock had a pullback Monday and Tuesday onto support and then bounced off that. Amazon aligned perfectly with the level I put last Sunday charting at the 96.60 area a share. Historically, has done this. Basically, I mean, it's perfect at this point. It did it once we broke above, we pulled back and held. It was a lot of wicks that may have shaped people out, but long term, it held that on the 30-minute. It kept that momentum going, kept the buying pressure strong. After we pushed back up, once again, we faked out above the $150 a share or $100.50 a share, pulled back inside that zone. We held that support, pushed back up midway, pulled back again to that support, and we still had buying pressure. So that's why I always use major zones, like larger time frame zones, because all you have to do is wait and size accordingly. This is just my personal opinion with how I find the zones. Just going off Amazon for the 4 hour. When you see that pullback on the 4 hour is a major wick, obviously, but almost every hold on that support was a major wick. The first time it contested after breaking out above, it had a few candles hold there. So it was like a confirmation at that point. On the 4 hour for this past Tuesday, it wicked below that support and it held well. And of course, you can see what happened. It ran, almost $7 a share from the low to the high that it closed out on Friday. So these zones also work just like how Apple did. So going off this now, the only thing that I would look for, we have a heavy rejection, which it looks like we're currently there. I'm going off the 4 hour, but it's only within the past 2 to 3 months that I'm looking at stuff. We're currently in the same zone as a heavy reject historically. We've broken out before, but we pulled right back inside. And that was, I want to say, earnings release that made this happen, which I'm pretty sure that's what it was. So Amazon's currently at a rejection zone. If we get a pullback, the previous $100.50 a share, anywhere in that zone is going to be a support now. So that's one thing I look for on a pullback with the market is if Amazon can hold that $100.50 a share for that support. Outside of that, There's also a main rejection, which that's what I just talked about, around $103.80. You can raise up to $104 if you want to, but anywhere in that zone, Amazon is going to struggle unless heavy buying pressure just pushes this straight through. And if it does break through that, I mean, at that point, it looks, I gotta look daily. It looks like the gap fill, if it breaks the $104 a share, is going to be roughly around 105, 105.80 to 105, $106 a share. So after 104, it basically goes to 106 with the gap fill. So it's going to be all about patience with this. Obviously, the main move was this past week when it held that support. But if you want to get calls on Amazon where it's currently at and just not hope for a pullback, because the pullback may not happen. It's never a guarantee with that, but that's just the safest case scenario. So your risk is minimized and your reward can be higher. If you buy calls Monday at open and we pull back to that support, you're going to have to hold, I'd say roughly down 50, 60% possibly with a $3.50 drop on the stock share price. So for me, how I do it, I just wait. If no setup aligns, you don't trade. It sounds horrible and I get that. But at the end of the day, with what I try and keep in my head is I'd rather have the same amount of money the next day to trade with than have more money. I don't want to risk losing money if there's no solid setup to take with how I chart. So I would like the main ones I watch obviously is Netflix and then SPX mostly. Off open, I watch Netflix only. But if you're watching other stocks, you want to find the major zones to chart and just wait for it to come to you. If you want to chase the breakout, you can. If you want to buy puts on the support break, you can. But you have to realize their sizing has to be appropriate for the risk that may come with that position you're taking. That's the only issue with playing stuff that breaks out or breaks down on the downside. So now I have ENPH pulled up. And I think we charted this last week, if I'm not mistaken, because these levels are obviously still here. So see where Monday is, and I'll put a highlight there. So Monday was right here. So basically, we didn't have the pullback to the main support I talked about around the 182 a share, 183, but we held a new support, which at this point, I would consider this new support. So I can take the one below, I can leave it there, I can delete it, I can just change the color. But the support that we just held this past week, I'm going to put a line here and see historically where this aligns or what it looks like. And I'll keep that purple for now. I'm going to switch to the daily. So going off that purple, we had a few rejects right here off of resistance. And like I said before, it's never an exact pinpoint. I'm just looking to see, okay, we held this, what days was that we held? We held that new support Monday, Tuesday, and Wednesday before we broke out on the upside. So that's why I put this line up. Historically, has this held before? Has it rejected before? So I'm trying to see, okay, if we held this Monday, Tuesday, and Wednesday without breaking down heavier and we bounced super heavy off buying pressure, is there any way that that level historically has a meaning? Is there anything in the past that has done the same thing? Like it's rejected as resistance, which it has. Did it hold as support, which I can't find currently? So I know historically it's held on the downside. It's rejected. So that's a reason now why that held the other day as support on Monday, Tuesday, and Wednesday. That's why I put that level there. Now I went back and saw, okay, there's historical reasoning as to why it held Monday, Tuesday, and Wednesday. And of course, after it was done holding it, broke out above the $204 share resistance I previously had. And now at this point, which hopefully you guys are slowly catching on, we're at a zone now for a rejection. Is there an exact pinpoint number we can use price per share to keep a level there? The only thing that I usually do, so I see two heavy wicks on the upside, but I want to bring it down so it's more accurate. I don't want to use the actual main wicks. I want to find, like I said earlier, the main overall candle that I've touched. So as of right now, I'm going to keep this level white to go back historically and check. I have it around $212 a share right now. So I'm going to switch to the daily and I'm going to head back to see, okay, do I have to raise this a little bit? Do I have to lower it a little bit? I need to find candles that correlate on a good time frame with this. So right here, there's a lot of just wicks. I don't like anything there. We had a few fill candles, hold on the upside. And then once we broke down, we had a wick on the upside, try and break that resistance, and we failed. So as of now, there's a little bit of a zone. And here's a lot of rejections that wicked up on the upside. So I could raise this level up $3-4 a share just to give it more leeway, more of where the wicks and candles are historically, because now we have a few rejections. Now this is acting as resistance historically back in mid 2022. So before we broke out above, we rejected just in this time frame 1, 2, 3, well, basically 4 times. The fourth one was a consolidation that broke out from the earnings release. But overall, in the zone of 216 a share, 217 a share, there's a rejection on EMPH that's going to be coming if we push higher. So now I'm on the 30-minute just looking at this. This correlates a little bit better with the current time frames on the charting that I just put up. So now we got a little bit of a few rejections before we broke upside. We held support about $4 above, rejections slightly wicked above, pulled back in. So anywhere in this zone, we have a rejection. It's all based on how you feel. You want to raise it up a little bit to 218 a share. You want to keep it down at 217 a share. This is where it's all about personal comfortability with when you put levels in these zones. For me, I would like to keep it roughly around like 217, 216.50, because in that area, we've wicked above and pulled back. So I know, okay, if we touch this level, we've seen it wick above. I'm like, in my mind, my mindset is, okay, I remember charting this. It's wicked above and pulled back. It's wicked above and pulled back. It's held consolidation and broken out on the upside. So when this level contests around the 217 a share, I would be looking at, is the volume pressure increasing? If I'm looking at tape, is the buying higher than the selling? And also you want to focus on, is the energy sector hot that day? ENPH is in the energy sector with XOM, Chevron, it's in the same sector. So if energy and oil is hot, ENPH could break out and totally ignore all these levels. That's another thing you have to look at when you're focused on charting and the overall watching the market, like as you chart and you watch how it moves. Don't just assume this level's coming up, it's going to fail. It's a resistance historically, it's going to fail. If energy's hot, you have to be careful. If the whole market is green and energy's red and it's pushing, then you may want to look into, okay, it could reject here because the overall sector is red, even though EMPH is currently green pushing upside. You want to try and use like other sources outside of just, okay, I have a rejection level coming up. EMPH is pushing, it's up 2% on the day. I don't think it's going to hold. You can't be that short and sweet and just very, very biased without looking at outside information with the sector, the overall market. Like you want to find out, okay, in my favor, what can I look at to make this less of a risk when I take this position? So outside of just 217 on the upside, there could be a pullback to support at the 204. So those are the main two zones I have right now. Obviously, we're in a heavy consolidation just at where we're at. Anywhere between 210 and 212, we're in a heavy consolidation. We need buyers to push this up to the upside. That's the main thing to focus on. If we get a pullback to 204 and it holds there, calls is safe to take on the upside, but just make sure you know your trim, you know your risk associated, size light for your portfolio. That's all you can do. So now I'm moving over to GDX. I personally have never traded this, and I don't think I've charted it, but I know what it is. So I'm going to start on the daily. Well, I'm going to go to the weekly, actually, get a feel for this. So just looking at it how it is now, we can tell it's been running up for 3 weeks back to back. We're contesting the heavy rejection historically that happened beginning of 2023. So we know the zone that's coming up to has been a reject. So that's the first thing I saw on the weekly. Now I'm going down to the daily. Okay, on the daily now with like closer time frames to where we are, is there multiple rejections? Is there a support that held historically? Just going off the top, I'm going to do the overall candle fills right here. So I don't want to just do like, 33.34, I'm going to put a level for rejection. I want to look for the overall, like where multiple candles either go through the zone, come back inside it, or candles touch and reject. So I like that 33 a share area, 32.98, anywhere in that area. I want to put a level there just to check historically now on the daily for now. So just using this, we've had a rejection. It has not touched the level, but it's in the vicinity of the zone. That's what I want to see. We had a breakout, pulled right back down. So at the high of this consolidation pullback on the downside, it touched almost $34 a share. We got a reject that was about 50 cents below that zone. And right here was almost a pinpoint. It basically almost hit dead on at $33 a share. So I'm going to just go back a little bit more just to check. We had a support hold slightly above. We had rejections that wicked above, came back down. So just going off the zones, not a dead set price of 33 a share, but in this vicinity, we've had it respects that level, whether it's support or resistance based off the current price action of GDX. So now I'm going to go to the 4 hour and more so look at like the current time and see, okay, can I readjust this a few cents, or is 33 a share the good spot to have right now? So I'm going to go back to where we touched out a few times back here. I'm just looking, I'm observing, I'm not rushing it. I'm just watching candles, what's happened in the zone. We bounced pretty nice right here, pulled back and held, dropped below, it came back up. Anywhere in this zone's consolidation. Anywhere around 33 a share on GDX is going to be consolidation. So I'm just going to keep it where it's at. I could raise it slightly, which I may do up to like 33.20, 33.25. I like that area right there. And just going off the recent double top that could happen, this zone is going to be good. So I can see GDX pushing up another $1 a share maybe, but the main thing you want to focus on is this ETF going to be hot? Is the overall going to be hot? You don't just want to go off like what I said with ENPH. Oh, it's pushing, it's up 2% on the day, it's going to keep going. Oh, it's going to reject because it's up too high. Oh, it's red on the day, it's going to push up because it's red. You don't want to just assume based off that little information you have. So now when I look for a support zone, first thing I see is obviously this consolidation before the gap down. I'll put a level around there. So 31.50, 31.40, anywhere there, I'm going to put a level for now. And I'm going to keep that one white just to see, okay, where historically on the daily could this have also respected the zone? And sure enough, we had a lot of consolidation and rejects here before we broke out upside but pulled back inside. We had nice rejections here. Had a huge green candle break above but pulled right back inside. And then it tried to break above again about 3 days after, and it wicked and came right back down. So I know around 31.40, 31.50 a share, this is going to respect that level, whether it's above or below the price action in the current times. And obviously, since we can see visually, that level is below the current price action. So this is going to act as support now, which I'll make that red. So the two main levels I see for GDX, rough estimate, not a pinpoint to the decimal. I have a resistance at 33.22 and a support at 31.44. It's a wide gap since this stock does, or this ETF does not move a lot in a day, but these are the two main levels that I see for this one. So now we're looking at Home Depot, HD, and I'm on the daily currently. I'm going to switch to the weekly just to see. Okay, so I've spoken on this before and I'll do it again. I like to start on the weekly when I'm not too sure of a stock I haven't looked at in a while. Obviously, if I scroll back farther, I can see, okay, we're going lower, we're going lower. If I switch to the weekly, I can see right away, okay, everything that happened before basically mid 2020 does not matter for charting because we're not going to drop down to $227 a share overnight. Home Depot is not going to drop that heavy. So I'm only focused on basically the start of 2021 for charting, for zones. That's all I'm focused on. So just going off of this, we held support. I'm going to put a line there only because in current times, we held that support and pushed up. So around 280 a share, I have my first support zone. I want to look back and see. And sure enough, there's not much areas other than just slightly below where we rejected before breaking out the first time. So the support zone is mostly going to be either right at where this happened or slightly above, just give it some leeway. So I'm going to keep this around like 281 a share, 282 a share. It's a zone that you're focused on. Obviously, if we keep this trend going, which is what I first saw when I went to the 4 hour, a pullback to this will break the support, but think about it. A pullback on this is $12 a share. Could Home Depot pull back that much? I'm not too sure, but I'm just speaking out loud like how I think when I chart. If it does break this support, this trend is going to hold. We've been making lower lows, but we're making higher highs every time it pushes back. And right now, that's what we just did. We broke the previous lower high. Now we're making higher highs at this point. So now when I'm focused on this charting on the smaller frames, the 4 hour right now, we had this falling wedge going, or bear flag, whatever you want to call it. Now that we broke above the previous lower high right here, I like to use this area, this zone as my next support, because if we pull back, logically off the pattern analysis, it's going to hold support anywhere off this trend. And you can find a support zone from this wedge to also use for like a double confirmation. So for me, you could obviously put it right at the wick, this wick right here. I don't like to use wicks. I think it's a fake out. I don't want to do, I want to give it leeway. I want to give it room to pull back. So I'm going to lower this kind of like around where this candle opened up on the day. It wicked above a few times. Historically, the candles wicked above, pulled back. So anywhere in this zone of like 289 a share, 290 a share, I like this for support. And if I go back to the start of this fallen wedge or bear flag, whatever you want to call it, we held that support right here pretty well. On a major pull down, we filled right back up. Obviously, we broke that support days leading up, but that's fine. You just want to find correlation with it. So I'm going to make this white line. I'm going to change this to, let's do purple. And I want to go back in time and just see, okay, does this purple line have any significance with the charting that may want me, like it may want me to raise it a little bit, maybe lower it. I want to find something. First thing I see, we had a gap down and market open is where it started at, where that purple line was, and pushed up. We came down and we contested support. We held consolidation, held. So this zone has held support before. The zone is respecting the price action. Going a little bit more forward, we rejected here. We broke above, obviously, but we pulled right back down. Then we got back above, we held support, broke right back down. So this zone has some respected correlation historically. So I can keep it there. I can raise it up a little bit. I can lower it, but I just like to keep it there because I found where it had reason to keep it there. It held support here for almost a month straight. It pulled back, held support, pulled back, held support, pulled back, held support. So I can keep that zone for a slight confirmation. The way I'm looking at Home Depot, if we get a pullback, calls in this area around, I'd say 288 a share, 289 a share, that's a solid area to get calls, but always look at the overall sector. It's a consumer discrete for Home Depot, I'm pretty sure, with Kroger and all those other Target, those stores are in the discrete. So you want to be smart with, okay, is the sector hot? Is it cold? Home Depot's dropping even though the sector's hot. The S&P is green, but Home Depot's red. Put more into consideration than just, oh, we're at that support zone that Breezy was talking about. I'm going to get calls. Or, oh, we broke the support on the downside. I'm going to get puts. You want to use outside factors to bring an overall idea into a trade position, not just this level's holding, I'm going to get calls. Or this level's rejecting on the upside, I'm going to get puts. Always look into other factors before making a position. So with Home Depot, I have a main support at around 289, 288 a share. And then below that, obviously, the 282 a share. If you want a heavy rejection for resistance, anywhere around 298 a share, 297 a share, we could not break that after that major gap down a few weeks ago, well, about a month ago. This is going to be a heavy reject if Home Depot keeps pushing. If Home Depot pushes above this rejection zone and then pulls back as support and holds, that's a nice place to get calls. If it breaks above 298 a share, then pulls back to 298 and it holds with buying pressure, because now that resistance flips to support, it's going to hold it. So I'll just keep these three levels that we can check next week for the next charting session and see how well they did with the market. So now I'm going over to Intel, INTC. Like everything else, I start on the daily. I want to get an overall feel. Let me go to the weekly now because the daily I can't see very much. And this is exactly why I do this. So right away, just the visual right here. Ignore the lines up here. Let me delete them actually. Just going off the current quote unquote bear flag, consolidations, whatever you want to call this. Right away, I noticed this. Going back on the weekly, look at all these rejections. There was a zone going on right here. So I can raise this a little bit. I can lower it. I'm going to keep it right there for now, only because it touches the main first one. It had a fake wick and pulled back, and then it rejected heavy here, and then obviously a lower high on the next one before it broke out on the upside. So right away, 3161 I see as a zone. I'm going to go to the daily to get closer to the current time frames. We just broke above that on Intel. So now I'm on the 4 hour now. We have a support zone. Does that make sense to everyone why I said support? Historically, that level respected price action. Now that the price action is above that zone I put, we can call it support since that's below the price action. So this area is my first main support at 31.60, which obviously we had a huge push on Intel. We could break straight through this. And the next support that I see would be roughly around $30.70 a share. Anywhere around there will be the second support. But just going off the weekly, that 31.60 a share is going to be the main support until it breaks. And then if you want to find a resistance zone, you can either use anywhere here before we broke down the downside. We have to break out now. So at this point, we're going to see if the continuation happens to push Intel on the upside. We're going to have a heavy reject coming anywhere in this zone right here, which is going to be roughly just under $34 a share, which is about $1.30 higher from the current price that it closed on Friday. So I'll put a level there just to keep it, even though I haven't traded Intel before. I don't watch it very much, but it's tech. It's tech sector, same as Microsoft. It's in that tech sector. So I'll put a level around $33.96 a share, $34 a share, dead on. So I'll keep that there to see how it respects throughout this week. We can double check it next week. I'm going to go to the daily still and scroll back a little bit, see if that orange zone has any respectful. It didn't really have much. So that's only in the current times that this orange held or had any respect to price action. So I'm going to go to the 2 hour here, come back a little bit to that orange and just look at it a little bit closer. And you guys can see why I put that there now. You can even raise it up a little bit if you want to, or lower it. But like I've said previously, you want to find just a zone. You want to find an area of putting a line where when it hits, you're like, okay, this is a rejection historically. I have to be careful. I don't want to get calls right away. I want to see a breakout and hold before I get calls. I want to see it reject and start forming a downtrend for me to get puts. That's why I put minimal levels, because I remember exactly why and where I put them at for what reason as well. So these are the three main levels I have for Intel. It's a major gap upside, which it's about $1.60 basically on the upside. So 34.28 area I have for a rejection is resistance. And then first support is the 31.60. Second support is the 30.70 a share. And now I'm going to go over to Microsoft. And I kept these levels from this past week, and it looks like they did pretty well. I'm going to switch to the daily first, just to show you the overall for people that weren't here last week. So the white line on top, I did not make orange. There's no reason behind that. I just put that level there and didn't really do anything. So we're slowly approaching that rejection of the 290 a share, 291 a share on Microsoft. And then going off the 30-minute, Monday was right here. I had this red support at 274.30 a share, and we actually basically dipped below, just like Amazon, just like Apple, but we held and pushed back upside respectfully with buying power. So just looking at this, the volume had the buyers. We wicked below, obviously, but if you size light enough in this zone, I told you, you can put it anywhere, 273 a share, 272 a share, 274, 275. You're sizing light to the point where if it goes to zero, you're fine. But if you are correct with your charting and your main zones, I mean, think about this. Microsoft, ever since that support bounce, it ran just under $15 per share. That is a massive move if you played zero DTE or even the following week expiration. If you grabbed a 280 call, 285 call, it would have printed. There's no way it wouldn't have. So going off that, that's one of the main reasons why I like to keep my zone simple, maybe one or two support zones, one or two resistance, and I just wait. I let the chart form in front of me and I will act accordingly. I don't chase the stock. I don't chase the chart. I don't hope for something and just enter blindly. I'm always focused on where's the main zones, because if it touches and it shows what historically it has done, the risk is minimal. My reward is a lot higher. So I'll pull this up. She said, where do you see the volume in the candles, or how do you know the volume? So basically, if you're not watching the tape, I know there's a lot of brokers that show the overlapping volume. And this is one of the main things that I don't want to say I use it every day, because it's really difficult to actually see like where is the volume increasing at. Because when looking at it here, looking at the volume on the bottom, these are like the volumes per ticker. I'm on the 30 minutes, so each volume ticker is going to be 30-minute time frames. The volume did not increase when it had this downside, which obviously you can see. Going off the chart is the main thing you see after it happens. What do you use to watch tape? I'm going to answer that. What do you use to watch tape in a second? The volume pressure didn't increase. You don't, I mean, you can't visually see off the volume candles that the buyers were heavier than sellers. Obviously, with the candles, you can, but that's why when I watch tape, I'm always focused on like, okay, is this the tape holding a certain level? Obviously, going off the candles, you can see a double bottom formed, which is a good indication that upside is coming. It can obviously break, but that's just a more like it gives you probability. There's a double bottom, end of the day push up, you can get calls and hold at that point. When I'm looking at the tape, I'm mostly focused on, okay, so when this first double bottom formed, I want to see if shares get filled below this price when it comes back down. Are people trying to sell below? Are people trying to buy above the ask and push the share price back up? I don't want to get too much in the tape, but it's more so like when you're watching these candles, I'm on the 15-minute right now. You see this dip in the Tuesday. Obviously, Monday sell off. We didn't get anywhere near my zone for support. So you're not going to buy calls yet. I'm focused on, okay, the next day we gap down. Right away it opened straight red on the 15-minute. So now we're below this zone. Obviously, you can put it down here at 272, 274. I'm going to keep it where I had it originally, around 275, 274 a share. I'm looking to see, okay, so we have a first low right here, or even a low right here. I'm not buying right away. Yes, we broke below. It's kind of like we just broke below the zone I have. I don't want to get calls. You're monitoring the stock now. You're watching the candles form. You're watching the like green candles, red candles. If you watch tape, you can watch that. But just in general, visually, you're watching candles. You have this low form it open. We try and push back up and we reject. So now we're making a lower low, obviously. After that lower low forms, you're looking for either a higher high to form. Let me go to the smaller frames. Let me go to 5-minute. So now you're looking for trends. Come on, go back. There we go. So we had this breakdown at open. We had this pullback, came right back down. Lower lows forming right here. Now we had a pushback. Okay, we rejected. We're coming back down again. So now we have a lower high forming. At this point, I'm focused on, are we going to hit a double bottom? Are we going to hold support and make a higher low and start to uptrend again? That's when I'm looking for my position. I get the zones on the major. I use the 15 and the 30-minute, or if I have to, I'll use the 5. But I know how to read the 15-minute and like break it down to the smaller time frames. So when I'm looking at the 15-minute, I know just looking off this, we're making lower highs. The lower low is forming as well. I just know how to translate a 15-minute to a 5-minute chart or a 1-minute because I can see what's within these 15s. So when you get this lower low forming here, now you have a lower high forming at this point. I'm looking to see, are we going to get a double bottom on the next one? Are we going to make a higher low on the next pullback? And sure enough, if you don't want to call us a double bottom, you can call it a higher low. So at this point, I'm watching the stock move at this point because we held support with the low on the day. At this point, you can either size extremely light one contract, you can size a few contracts, but this is when I start to size into my positions. I'm looking for one contract, two contracts, and as the momentum holds, candles fill, we break upside, we break into higher highs, we start to push. I'll slowly load in on pullbacks, and that's when I start to use the 5-minute. Because then when at this point, when I look at the actual stock, I'm looking for pullbacks within the 5-minute. Obviously, there was no heavy pullback, but just before close, this is something I'd be looking for. We pulled back to basically the very first lower high that formed at market open. Now we're basically making a double top with that same zone. If we pull back, I'm looking to add more because my position is already up. I'm sizing very light as I go in. If your full size is $50 and the contracts are 25 a piece, you may buy one down here and then not even want to add in because you just like your risk is $25 right now if you bought one contract. So I'm looking at the candle momentum. I use tape, but if you don't use tape, just watch the visuals of the candles. Watch the zone that you previously had. Is a zone holding as the end of the day is approaching? Sure enough, overnight we gapped up and we just nonstop ran. So you can't really find a new entry because for me, I'm always focused on I missed the main entry for calls at the bottom. I don't want to buy when that contract's up 80%, 100%. So I'll always get a starter going if I can afford it with my account size. Obviously, I can, but it all depends on what your account's at. Can you afford to size in 1 or 2 contracts? And then if you can afford to size more later on, maybe you can do that. But if you can only afford 1 or 2 contracts, the risk is going to be buying at what you hope is the double bottom, what you hope is the second low on the day, the higher lows forming. That's the risk you're taking, but you have to size accordingly to how you feel. So when I watch tape, he just said, what do you use to watch tape? A lot of people use Dash Trader on I think it's TOS or whatever. It's expensive for a monthly subscription. All I use is the Webull NBBO and then the Time and Sales monthly subscription. And I'll type that in the thing right here. The NBBO is $9.99 a month. And then can you show it? I can't show it when market's close because it won't pull up. Only when market's open, I can see the data for tape. But I'll screen record my screen tomorrow and I'll post that somewhere, like just a screenshot or something. So that's the price breakdown for Webull. The NBBO is basically like what Dash Trader shows you with like the blue highlight, yellow highlight. It shows you like above the ask, at the mid, at the bid, below the below the bid. It's tongue twister. So I use just Webull. It's cheaper. I get the same results. I've tried Dash Trader. Dash Trader is better, but I find the same results using either one, and I'm saving almost $100 a month when I use just Webull. Because I mean, as you can see, I chart on Webull, so it helps to use the tape on that as well. Random, but hella dope how you're going slow and step by step. Yeah, definitely, Alexander. I try to keep the basic charting stuff every time because I don't know who's new when they come in. I try and watch certain people to see if they keep coming back just to get like a familiar name count and everything. But I try and just stick to literally the basics. Charting is so simple. Buying is the hard part. Charting is the simple part. You just chart main zones like I do. Some people do 10, 15 levels on one stock. I just do 1, 2, 3, or 4. And then I wait. If it never happens, I don't trade. That's just how I am. So I do got to hurry up. So I'm on Netflix right now. I'm going to go to the daily. Netflix is my bread and butter. So I'm going to try and, right away, rising wedge. We're contesting that lower band, which is now this resistance trend. Obviously, when you're in the wedge, that's support trend. The top is going to be the resistance. Netflix has been on a tear right now. I've been playing the run up. I'm swinging calls, obviously, from Friday that are up. I think they closed at like 65% for this upcoming Friday expiration. I'm expecting Netflix to continue to run into earnings and hopefully break inside of this rising wedge again. I do see the buying pressure just going off the volume candles. We had heavy buying pressure based off obviously green wicks or green candles. It's very basic, but that's what it shows. Obviously, buyers push the price. Candles are green. You know there's more buyers than sellers. We had low volume, and Netflix is still trending upside. Compared to the first 2 days that broke out for Netflix, volume has died down, and we're still trending upside. So that is showing me if we get heavy volume and we keep pushing, buyers are coming in, sellers are starting to like get out of their position. Short sellers are getting out of their position. I want to see volume increase more for Netflix to catch that next leg up. Because as of now, the 342 a share area I have is support. And I'm going to change this color now to red since we're above that price action wise. So I'm looking at a pullback on Netflix if need be to add into my position. I only have runners going. I already secured profit for about, I think, 25% of my position. The rest I have is all runners. The main thing I want to see with Netflix, obviously on the daily time frame, you can put these trend lines however. You can lower it, you can raise it. It does not matter. It's for your personal visualization. For me, I like to keep it so that it had a few wicks on the downside like we just had right here. I don't want to use just the bottom of these candles because if you do that, we're basically already back inside the trend. As you can see, I have a few wicks on the bottom filled, touching. We're back inside the trend. I technically don't feel like we're in the trend yet of this rising wedge again, only because we faked out on the downside below historically. I want to keep those fake outs in the picture along with where we currently are. So I still see a slight push having to come through for Netflix to get back inside. So I'm in no rush to add to my call position. I'm in no rush to assume we're going to keep running as well. We could pull back or consolidate all week and not push. there's no telling what this is going to do. The volume's been low. We're still uptrending. Historically, we've had low volume and we downtrend or we consolidate. So the volume needs to increase on Monday and Tuesday for my liking. That's what I'm going to be watching mostly is just the volume on the first hourly candle, the first 30-minute candle. That's all I care about at open for Netflix. So going off shop now, I'm going to go to the daily. We're slowly curling. First thing I see, which I hope you guys are starting to pick up on this, trend line. We're holding this trend, pull back trend, pull back trend. We're pushing, we're pushing. As of right now, the main zone that I see with a lot of touches is right here, but that's well below the current price action. So all that's invalid until we make lower lows. So I'm going to put a line roughly around here for support. As you can tell, this is the one time I've actually put a line at wicks, but it aligns for a double top, if you guys can see that. First top reject, second top reject. So we have a double top off wicks. That's the one time that I'll do that. So I'm going to make this red since the price action is currently above that zone. And look at that. It aligns almost perfect with this rising trend right here. See how that works? If we pull back below the support and we hold the trend, it's a double confirmation to get calls for it to push back up on the upside. Trend line, support zone, both are in the same vicinity. I like that right there. Going off the upside reject, first thing I see obviously is this right here, this weird candle. So I'm going to put a level at the top of the wick just to look at historically, why was this here? Has that price action shown any correlation historically? So I'm going to go back a little bit. So there's not much going on back here. Not many touches, not much going on, but I do see a few candles that went above here. Also with some right here before the breakout. So I'm going to raise this orange line about $1 to $2 a share and then go back to current times and see if that has more correlation with what's happened on the 4 hour or the 2 hour. And sure enough, we have a double bottom that held support. It's slightly above, but just like I said earlier, it's a zone. It's not a pinpoint to the decimal. So we had a few rejects here. I mean, we had a support here, double bottom. We had a reject right here that pulled back down. And then go into the last breakout we had prior to earnings, when we had that run up, a lot of rejection. We had a rejection here, finally broke up, tried to hold his support, pushed back up, broke back down inside, ripped right through, and then came right back down from earnings. So this zone around $49 a share, $50 a share, I like that for rejection. These are the two lines, these are the two zones I have. Resistance is around $50 a share. Support is around $45 a share, along with that trend line holding if it pulls back. Watch that trend line, watch those two zones for shop. So this ETF, it's the semiconductor ETF. I've never looked at it before, never traded it. So just like before, start with the weekly. Nothing matters prior to these lows. So anything before 2021, I don't want to look at those levels. So I'm going back to the daily now. What do I see? What do I see? Right away, look at this. Double top historically, it also correlates with current rejections that's happened before we broke out on the upside. Right there. I don't know if you guys can see that or not. The first two double top had a lot of consolidation. Obviously, we broke up, back down, back up, back down. Before the previous high, we had a rejection and pulled back. Now we have a new high forming. So there's a support zone in this area. Anywhere in that zone. Doesn't be perfect. Doesn't have to correlate with this double top back here. You just want to give it a zone so you know this is support. Around this area, if we pull back, it's a heavy support for me to get calls. So I'm going to make this red. So now I'm going to look for a reject for a possible resistance. There's a little ways up right here, which is not too much of a gap fill, but we had a lot of rejections. Finally broke above. We pulled back and held. A lot of consolidation, up, down, up, down. We tried to break back upside before the reject right here. So this zone does show historical correlation to why it's there in current time frames. So I'm going to keep that level there. You can make it 268, 267, 266. You want to know why. That's all. It doesn't have to be a pinpoint to the decimal. You just want to know anywhere in this zone when the price action approaches it in real time, this historically has been a reject or a support when the price action is above. So these are the two main levels I have for SMH. Support at 254, 255 a share, resistance around 267 a share, 268 a share. Those are the two main I have for this one. Now going over to Tesla, I'm going to start with the 4-hour and the two main zones I had this past week. We did not contest the support, obviously, of the 177, 178 a share, but we did break above the resistance I had at 200 a share. We easily broke through that on Friday. Friday was a massive day for Tesla, running almost 12 bucks on the upside from open to close. So now at this point, that quote unquote resistance is now going to act as support. So I'm going to make that red line. I'm going to take away the lower support because now at this point we have to break below 200 a share for anything below that to matter. So that's the main support is $200 a share. Now I'm looking for a rejection. Hopefully you guys are starting to catch on for like the main thing I'm looking at with this. Basically a triple top right here on Tesla. If we pull this back, let's see if it shows anything back here. So it's just consolidation. There's no pinpoints, there's no bounces. So this is all on the smaller frames with that time being a reject. Anywhere in this zone, don't put it at the very top, 217, 218 a share. You can if you want to, but I want the overall candle touches, the candle wicks, the zone touches around 212 to 213 a share. I like as a rejection on Tesla because that way if it wicks above, you're not freaking out about, oh, it hasn't touched my zone at 218 yet. It can go above. Historically, it's gone above and pulled back. So you know, at least how I'm going to look at it now when I see the chart, if it does contest this, we can wick above and we may not keep running. Or we can wick above and pull back for consolidation for a few hours and then rip off that now support. So now I'm going to switch to the daily just to see if that orange line has any correlation. Is support and resistance the same as supply and demand? Yeah, so I got to write this down at some point. Someone that's in here, supply and demand, how do those correlate with support and resistance? I want to say supply is resistance and demand is support, if I'm not mistaken. I always say support and resistance, but supply and demand are the same thing. They just mean one another, if that makes sense. Yeah, same thing. So supply is resistance, demand is support. Tesla today broke Q1 production. Yeah, I saw the news release for the Q1 earnings. We could see a push up pre-market. But yeah, the main orange level, we had a support bounce here. So around that 212 a share, 213 a share, historically, we've shown respectfulness to that zone. Once again, we had wicks below, obviously, right here on Tesla, but we pulled back up every time. So anywhere in this zone, we had a reject here, we pulled down, came back above it. That zone is going to be important. So around 212 a share, 213 a share is my main rejection on Tesla this week. That's what I'd be watching. So resistance, 213, 212 a share. Support is going to be $200 a share on the dot. So before I go over SPY for the charting, this is going to be the last one on the day. Any questions you guys have that you want me to talk about once I finish SPY, type them in the Zoom chat question area, like the Zoom chat. Go ahead and type any questions you have while I explain SPY with how I see it for this week, because I do want to end this kind of like right after I finish SPY. So any questions, just type them now and I'll answer as soon as I'm done doing my analysis on what I see for SPY this week. So just like this past Sunday, obviously this rising wedge, we're now above it. But just like we have historically, we've broken above and pulled back, but we are holding, we're pushing all buying pressure just off the volume candles and the green wicks on the 4-hour. The question at this point is, where is the rejection going to be? Where's the support if we pull back? So I am going to only focus on that at this point. First rejection, I want to see if this was pre-market or if this was, yeah, this was pre-market, the 410 tap out. Then we had obviously a lot of consolidation right here. This whole thing was consolidating. So it's difficult to find a pinpoint price for SPY, but the level I just put this zone at for rejection in the current times, we had a wick out here that pulled back inside. We had a heavy reject here. We had support right here. So this zone has respected this price action in the past. The only question is it still valid to this day? That's the hardest part with SPY because sometimes these levels are not pinpoint. They can wick it up 5 points above on the 4 hour and then pull it right back down within an hour and a half. So you want to be very cautious when you play zones on SPY. The main thing I look for is probably 213 a share, 215 a share on SPY. Anywhere in that zone of 213 to 215 a share, I visually right now see that being a reject for SPY or S&P, whatever you want to call it. Around 415, 414, 413 on SPY, that's where I see a reject coming. If we fill the gap based off resistance. I'll make that orange and we'll see how that goes throughout the week. Now with support, obviously everyone else should have saw this already, but the previous high, well, lower high that formed off this trend right here, I'm focused on this being the support now, where I have this white highlight. So I'm going to make this red, and this is going to be a heavy pullback, obviously. It's almost a $5 pullback from where we currently are on SPY, but that's the only support I see that's reasonable. I mean, historically, we've bounced there before. We bounced, we rejected here. If we go back a little bit more, we wicked above and rejected. So this zone is nice for support on SPY. I only have 2 zones. Everything's simple. I wait. I don't chase. I don't have 20 zones in a $5 price action range on a stock or ETF. I have 413, 414 a share, anywhere in that area for a rejection. For the main support, I have 404 to 405 a share. It's that simple. I keep it very basic. Does anyone have any questions before I end this, just so I can answer them while it's still recording? Any questions at all? You want me to go back to a stock, talk more about something? Just let me know. Can we touch 3 of these tickers on Thursday? Thursday. Yeah, let's do Thursday. We can do Thursday night if that works for you, Perez. Thursday night. Oh no, we have class Thursday night. Let's do I'll touch on it during class. How about that? After class Thursday night, we can touch up on stuff if that works for you. That would work good for me after Thursday night. That's perfect. Yeah, I'm glad I remembered that instead of making a promise I can't keep. But yeah, after Thursday night class, we'll touch up on 3 or 4 tickers and just see how the market reacted on the week. And then sure enough, next Sunday, we'll do the same thing, preparing for the following. Anyone else have any questions, concerns? Appreciate you, Coco. Nice of you to show up. You're welcome for the breakdown. I'm going to stop this recording. I'll stick around for a little bit.